With me, Luqman Hariz, the climb of the ringgit is not something entirely new. We've been seeing a positive performance from our currency since the start of the year. But ringgit has reached new heights since the beginning of this month. Newish heights. Besides the nation's economic fundamentals, the recent rise of the ringgit is also attributed to the depreciation of the US dollar. But although it sounds good, is a prolonged weakened dollar actually bad for us? Joining me on the line right now to discuss this is Dr. Afzanizam Abdul Rashid, Chief Economist of Bank Islam. Doctor, thank you so much for joining us.
Yeah, you're welcome.
First of all, the big question. Some are saying that the low US dollar isn't necessarily good for global markets, including Malaysia. Your thoughts on this?
I think it all really depends on the context of the dollar depreciation, because if you look at the real economy, the US economy is doing really well at the moment because there has been improvement in terms of business and consumer sentiments. The spare capacity in the manufacturing sector has become less and less simply because of the production activities has picked up its pace. And we saw that the second quarter GDP for the US economy has grown to 3%, which is essentially higher than the long-term average of 1%. So I think in the overall sense, the US economy is still doing well, and the depreciation of US dollar because of the expectation of the continuous rate high somehow stalled along the way because they have stopped raising the rates since last June. So it gives the impression that the Fed may not hike again sometime in the future. That could also have really explain why there has been weaknesses in terms of the US dollar.
Experts say, Doctor, that most countries are not ready to withstand the effects of a sudden sharp appreciation of their own currencies, including Malaysia. Do you agree with this?
Well, I think it really depends on the degree of the currency adjustment. If it's too rapid, then definitely it will be bad for the economy. But for now, the base case, we think that the adjustment is going to be very gradual. And because of that gradual approach by the Fed, that actually allows some time for the currencies to take adjustment, which may not be harmful to the economy in general. So I think, in a nutshell, it may not be too bad for the economy.
Well, still on the topic of specifically Malaysia, of course, exports is one of the key components of our economy, which it was one of the growth engines of the recent GDP growth. Would a strong ringgit versus the US dollar have any negative repercussions towards our exports in terms of, lowering orders from outside? Do you think this will happen?
It may be to some extent. But when we talk about currencies, there's always two sides of the coin. And of course, during depreciation of ringgit, the exporters seem to benefit more. But in the case of appreciation of dollar, I think those companies that has external debts may benefit in terms of servicing their debts because the ringgit has actually strengthened. So there's always a two-side effects in terms of the two-way of movement of the currencies.
All right, we have about 30 seconds left. Let's end with this. The FOMC meeting in the US is just around the corner. What to expect, Doctor?
Okay, I think in the last meeting they mentioned about the plan to reduce their balance sheet. They mentioned about the plan is going to be relatively soon. So I think the articulations of their plans is very, very critical because at the moment the Fed continues to reinvest the principal payments from its holding in agency debt, mortgage-backed securities, and rolling over of the maturing treasury securities. So I think the articulation is very key because if they do it recklessly, the concern is it may cause some systemic risk to the treasury markets, whereby we could see a spike in terms of US treasury yields bonds.
Thank you so much, Dr. Afzanizam Abdul Rashid, the Chief Economist of Bank Islam. Now, before we end the show, let's take a look at today's business brief. First, Bank Negara has lambasted a recent article by Bloomberg which quotes Moody's as saying that Malaysia's reserves buffer is amongst the weakest in Asia. Central Bank, in a statement today, says the article, published 2 days ago, presents an unbalanced and simplistic assessment of Malaysia's international reserves by focusing only on a rigid interpretation of two economic indicators. It adds, the report also reflects a lack of understanding of the Malaysian economy, external position, financial system and its economic policies, while also showing a tendency for misplaced country comparison, which it said had eventually led to an erroneous judgment of the Malaysian economy and its external resilience. It's unclear whether Bloomberg has since removed the article, but our attempts to find it on their website have been unsuccessful. Inflation has risen to 3.7% in August, exceeding a forecast of 3.4%. According to the Statistics Department, the main driver for the increase is the higher petrol prices. Core inflation also rose 2.4% year-on-year for that same month. CIMB says its relationship with Mitsubishi UFJ Financial Group, or MUFG, will remain strong despite the latter's move to sell its stake in the bank. MUFG sold its entire 4.6% stake in CIMB as part of a review of its investments portfolio. CIMB Group CEO Tengku Datuk Sri Zafrul Tengku Aziz says the two companies will continue to develop collaborations in complementary areas. MUFG has been investing in CIMB since 1974. And analysts have advised EPF and Khazanah against selling their stakes in Plus Malaysia Berhad. This as reports surfaced claiming that a stake in the highway operator may be sold to Maju Holdings in Riyadh Berhad. Analysts say EPF and Khazanah, who owns 51% of Plus through UEM Group, could potentially lose out on a steady stream of income if they let go of Plus. And that wraps up this episode of Markets Today. Be sure to follow us on all our social media platforms, Facebook, Twitter and Instagram at 50101. Download our app, as you can see there, available on Google Play and also the Apple App Store. I'm Luqman Hariz. Thanks for watching. Have a nice day.